Hello and welcome to Macro Mondays presented by the Goxstein News Network. I'm your host, Landy, and today is December 29th, 2025. We're going to look at Bitcoin here on the daily and the weekly. We'll also take a look at some traditional markets and gold, silver, and we might check in on oil as well. Because there was some economic data that was released today. It wasn't anything too major. It was about natural gas supply and oil supply. Very quickly, we can jump over here and we can see that crude oil inventories actually up by 400,000, and it was projected to be down. This is actually what we want to see, and this is non-strategic reserve supplies. So, although we've seen a little bit of relief on the natural gas side of things. We'll see kind of where that goes. Energy prices are going to be something to watch coming into next year, especially throughout the winter when it comes to natural gas. But we do still have that divergence between natural gas and oil, though natural gas has corrected a bit here. Something, outside of that to watch as we come into the new year, outside of prices in markets, is going to be, the narrative surrounding tariffs. What happens with the Supreme Court ruling. Now, understand that is the sections of the law that the administration's using were kind of hung out there as bait for detractors to the tariffs, and there's two other sections that they can use to implement tariffs. So realistically, the market already knows this, but depending on what happens coming into next year, if it does happen in January, either way, whatever is decided, I think is going to provide for some volatility. And then if there is some sort of a pause in tariffs, understand that they're likely going to be re-implemented under different sections of the law and executive order power. So the other big thing, of course, is, and I've mentioned this a lot across various Spaces events and some live streams and stuff like that. And that is that, January is the last month that the government is, funded through. So here in the United States, there's probably going to be some narratives building around that. And is likely going to become a political football. There's a few other things that are, slated to happen, but some good points brought up on some spaces today that I was in regards to crypto legislation, like the Clarity Act and stuff like that. And realistically, January is going to be tough. It's going to be a tough month out of Washington, D.C. So we'll have to just kind of monitor this situation and see how markets react. And as it stands right now, it's still the holidays. So seeing price not do a whole lot here for Bitcoin, not that out of the ordinary. Now we're still spiking to the upside, just above $90,000. This has been an area right around our inflection point on that weekly, at 89 between, Bitcoin is just trapped between these two weeklies here. Let me go ahead and draw, the 93.5 weekly here to the $86,000 weekly level. And right there in the middle, we've got right around 89 to 90 being a key area in between those. We also have the swing, the swing higher low and lower high in here. And that's right around 89. And realistically, we haven't seen a daily close above there. We haven't seen a weekly close above there. So not too much has happened. And when looking at the weekly here, Bitcoin just trading and closing inside of this weekly zone, it's consistently done so. We have seen that obviously Bitcoin came down and hit this next big weekly level after dipping in and touching the top side of, hitting the bottom side here, in this weekly, and then coming down and obviously taking liquidity off the top side here, and then even hitting the next weekly closing level here at that $80,500 area. And then not a whole lot has happened, right? And I've mentioned that I think that Bitcoin, from a weekly standpoint, is setting up for a bounce. It's just a matter of, does it come from here or lower, all right? And when I say from here or lower, I am referring to, kind of right directly from the zone that it's in between that $86,000 weekly on a close and the $93,500 weekly on a close. So this zone of interest here, above the inflection point, 80 to 90, 89 to 90,000. It's probably going to run the top side and try to get out of here. But realistically, it still has, it still has the opportunity to sweep the downside before a sustained bounce on the weekly. But I do think that it's closer, and I would be looking for it in the first part of this year, this new year coming. So maybe even in January. And we can see that the lower second standard deviation is now in the next big area, right? And we've got 80,000 to 78 on the close. It's now in that zone. It was just kind of skating across the top side of that zone at the end of last week. But this is the next big area where, when looking at the band setup here and trading below the lower first standard deviation, this provides for opportunity to come down and even sweep that low. And if Bitcoin does come down here, that 78 to 80 is the area that I'd be looking. And realistically, below 86 and then running these swing lows around, 83.5 to 84. If it starts closing anywhere below that 83.5 to 84, then this is back in play, especially from a weekly standpoint, swinging down below that 80,000 or even going down towards that $80,000 level and possibly dipping into 78 to 80 is fair game with the lower second standard deviation of the Bollinger Band set there now. And that wouldn't be out of the ordinary. Big move down, big expansion, sideways, and then a down for a retest by that lower second, sweep liquidity, and then try back for the upside from a weekly standpoint would not be anything too crazy. It's really just about holding this zone to the downside. 78 to 80 is what you need to be aware of if Bitcoin did start to lose the low side structure of these last few swings outside of this $86,000 weekly close. So essentially dropping below 83.5 to 84, that's where we start to look at 78 to 80 as being the next major area of interest. And it wouldn't really be unless we saw closes below 78 that I'd be looking for more in earnest on this expansion. And realistically, even then, probably setting up for a weekly bounce and probably a fairly aggressive one soon. But anywhere below the $78,000 level, especially on closes, if we didn't already see price plumb down below there, but if it did close below there, if we didn't already see it, we'd be looking mid 70s to the essentially 67 to 70 kind of area, right around these highs, right in here from the prior structure, running into the halving for Bitcoin, where we did see that new all-time high prior to the halving. To the upside, obviously, I'd be looking right back to above, the 93.5 weekly, especially on closes if we didn't already run, 94 to 96, 96 to 98, and then 98 to 101 or so with the opportunity for more. And obviously 98 to 101 is this weekly with the opportunity to head up to 102.5 here being fair game. And then we kind of just take it level by level as it's a big mess of weeklies up here between 98 and 101. Right above there, we've got basically 102 to 112. And then we've got all this weekly traffic in here, right? In terms of historical traded price that would be viewed by many traders, including myself, as major resistance. And I wouldn't be looking for shorts to be out anywhere. A real squeeze, like covering into these areas, great, right? Like into 98 to 101, 102 to, the next big area, 104, 105, up to the 109, 110 area, and then starting to get towards 112. It wouldn't be until I saw closes above 112 that I think the squeeze would be on for shorts. And even then, they still have cover. Next major area, which, by the way, this 107, 108 is right in between all of this stuff, right? So we're really looking at a massive area on the weekly of overhead resistance, right? So we're looking at essentially, you can take it from here at that, 98 to 112, and you can see all of the various weeklies in here. You've got the 107, 108, you've got the highs over here, the lows over here, the highs over here, so on and so forth. So it'd be all about reclaiming the low and then reclaiming each high on the way to the next low, and then you got to take out that high at 112 And then things get interesting to about 116 to 118 up here. Um, that would also be a major area by the upper first standard deviation. I don't think we're going there this week or next, but definitely keep an eye on things from the weekly perspective. As in terms of the weekly close, we do have just a counter trend signal that isn't looking very strong right now. Right. So this provides for additional downside, but I think the setup is there for things to bounce here from a weekly standpoint. That doesn't mean that we're going to get a momentum wave, all the way back to the overbought from oversold, but at least providing for a relief rally into those overhead resistances is likely going to be coming sooner than I think many would expect, even if we do get a shot to the downside. And I would say as long as Bitcoin is closing above that 80,524 here on spot, that preserves the chance for the weekly to actually get revved up and try for the upside above the current zone and into the next areas of overhead resistance. So I do think that is the setup coming into the first part of 2026. And as it stands right now, Bitcoin within this range, we'll wrap this up here in just a second, but Bitcoin within this range, nothing too crazy, right? All the stuff that I just talked about on the weekly, you can just see visually that between 93.5 and 86, Bitcoin is just trapping in the bottom side of the range here, rejecting around that 88 to 90,000 essentially, but realistically, like the inflection point being 89, right? And I've talked about this before. Above there, obviously, still need to see closes above that 90,000, 90,550 or so here to actually run this top side. But you can see if we get expansion above like even 90, 91,200, 91,300, that'd be expansion into 93.5 to the highs here, somewhere around 94. And honestly, if we see closes above 93.5, which we haven't seen since Bitcoin dropped into this weekly zone, then I'd be looking 94 to 96, which is the point of control. And then above there, that 98 to 101, even encompassing around that 102.5, maybe even 103.5 or so. To the downside, drop 83.5, we're running that zone, 78 to 80. Pretty straightforward stuff. Nothing too crazy going on here. There's the opportunity for additional drives of bearish divergence or continuation drives. I don't think that really means too much, again, unless we drop the actual low side wicks here down on the bottom side outside that weekly below 86. And on the other side of that, if we see a low set, what criteria we need to see? Technically, this is a high set. I don't know why it's not painting one, but on some indicators, technically a 3 candle high here. But realistically, to really start to see this even look like it's going to print on indicators a low, we'd probably need to see it above around 88.5, 89 from here in terms of closes. That would come with bullish divergence if this little area holds, but to be quite honest, it doesn't. It's not very inspiring right now with essentially a lot of professional traders on vacation. So all right, let's move on to we'll take a look at commodities here. We'll take a look at gold. So gold had a daily pullback right to the basis band. In lower term timeframes, I think it did. It did take a little bit of a pit stop here in the prior daily high zone between the close and the high, and then lost it and kind of went sideways. Probably going to try for a retest here. Big expansion down. What you might find interesting here is and I called this out last week, is this hit a major fib level at a 2414. It did top out at 45.50, but did not close above this 2414, and big rejection down right back to the basis band. And as long as it's trading above this swing at 4271, I wouldn't be looking for too much more, but if it did, I'd be looking, 4200, 4230 initially, and then we're starting to look down towards 4200 to 4230 is probably fair game. And then anywhere below there, we're starting to look back to this low side structure around, the 4150 area, 4160 by that 272. or the 2272. Now, realistically, as long as it's trading above the basis band, this has the opportunity to continue to run the highs, above the prior highs over here at, 4380. I'd look back to around 4400, 4425 or so, and then kind of gauge it. It could, aggressively try to push back up to the highs around 4500 again if that did happen. But it's really about the closes in that case. Otherwise, probably below the basis, we're looking at, between this high and this high, somewhere around 42 to 42.75 or so. All right, let's look at silver. And by the way, this is coming from a pretty extreme read. There is bearish divergence. That indicator's not populating it. We're getting a downturn in Stoke here, so there might be a wider correction coming into the first part of next year. Silver hit a major level. I talked about 80. It did hit 80, and went for the next big area between 80 and 85 essentially, and topped out at a fib level. This fib level is a 1888 or 88.8%. Yes, I do use the 888s. Shout out to a good friend of mine who put me on to that a very long time ago at this point. And there are people that use it in that way, but it's non-standard use, but works quite well. And basically pinned it at right around that 83.75 area right there on the daily, and then a big old pullback. But it's still trading above and closed above the upper first, which is now at 71. If we do see that drop, I'd be looking back to around 65, potentially even getting below there to hit in the 64 region, but 64 to 65 bucks. And then anywhere below there, we're looking right back to 60 essentially, and maybe even dipping below to 58, being fair game. Now, if we do see it trading and closing above the upper first, and of course regaining 73, 75, I would say, start looking back up to 70, 77 to 80, and then anywhere above there, right back to the highs there, maybe even trying for this 83 to 85 again. And then the potential's on the table for more. Now, this is a linear fib, with 88 to 90, it kind of being the linear and log agreement level up here, with a 1414 being that area of interest up here. And 88 to 90 bucks from there, but it's all going to be, I think, contingent. This could correct more, but it's going to be contingent on kind of holding in the 70s and closing in the 70s. Otherwise, it's going to be looking back to the mid to upper 60s initially, and then kind of take it from there. And the maintenance margin requirements for CME, which is not the only way to lever up on gold and silver trades, were increased 10% and roughly like 13.5% increase in maintenance margin or margin requirements. Otherwise, keep me your maintenance margin for silver was about 13.5. And realistically, what we saw, in both gold and silver on the open today for the Monday session was essentially a run up to a de-risk or de-lever on one side of the trade to take the other, right? So you can easily, you can get in that maintenance margin zone of interest that you need by taking the other side. So taking profits and then take the other side immediately. And that's what we saw a little bit there. I don't foresee this like unwinding aggressively just yet. I think it's got to lose some levels. It's still in a high volatility zone here. It's cooking, so it can still plumb the upside, and so can gold. It's just a matter of, does it hold some of the more local levels to prevent a correction before that and give the chance for more upside or not. Oil hit a major level here between 50 and 55, and still in a pretty heavy downtrend. And I'll be honest with you, 2026 projections for oil still looking pretty good, unless there's some sort of like incoming demand that just comes out of nowhere, which is not really normal. but if it's business as usual, I could see this run in this whole zone, 50, essentially 50 to 55. But be aware of it. Watch it closely if it does start to rise aggressively, mainly because the weekly could provide for a bounce, into the mid to low 60s. So just watch it coming into the first part of next year. Um, it's definitely worth keeping an eye on. Looking at traditional markets, Dow put in a high, kind of an ugly high on bearish divergence, another drive. But it's all about, this is a lower high, and it's all about the low here. This was a big expansion back in compression, just kind of crawling sideways, above the basis here at, essentially 48,100. Looking fine to stick in the strong half of the bands here, and above the prior high here at 48 to 431. Just be aware that if it takes out the highs, it could run the all-time high there, right? So we're looking, then up to 49,000 and potentially more, up to 49,250 to 350 or so. But if it does start to drop around 48,100, look down to just below 48 at 4750. 47,850 rather. Anywhere below there, we're looking for the next kind of low zone around the 47,575 to an area there around the 47,250 area, 240, 250. And for NASDAQ, lower high, this is not, it's not pretty looking. And it is very ugly. But realistically, as long as it's trading and holding above the basis, it's fine. It has even room down to the lower first here by the 25, 150, 160 area. If it does drop it, look to the lower second around 24, 850 down to the actual low here at 24, 650. That would be the next big zone down here between the lower second and lower third, kind of right here. It's fine above there. If we do see it take out the upper first and 25, 716, then we can start looking back to the 25, 830, 840 area, and really starting to push towards, the $26,000 and the all-time high again, around that 26, 182 to 26.3 essentially initially. So just keep a close eye on it. We're not going to have full trading days. I believe the first is when everybody's going to be off. So we'll see kind of how things go into Wednesday's close, which I believe is going to be a shortened day. I didn't even go and look. I said I was going to go look last week, and I didn't. But SPY, we'll wrap this up. SPY, it did make a new all-time high. The high is set. It's fine. Strong half of the bands. If it drops the basis around 683.50, 683.60, then we're looking down to the lower first, around 680. Anywhere below there, between 675 and the 671, 670 area would be the area to look. If it dropped it, that's where we're looking for, 667 to I'd even take 667, 665 down here on this bigger zone, and then possibly even looking down to the 660 area and lower. But nothing too interesting right now outside of it's another high painted. There is a bearish divergence as well that it's going to open with for SPY. So you can look at futures. I'm looking at the closes though. 692, anywhere above there, we're looking 695 to 700. And that's pretty much it. Covered a lot today. Again, back on Bitcoin, not a whole lot's happening here. And a lot of people are talking about the silver and gold and everything's running and Bitcoin's doing nothing. And it's like, well, Bitcoin also ran to $126,000. And granted, Bitcoin versus gold, silver, and the rest, and equities underperforming versus last cycle. Bitcoin went up aggressively for a very long time, and some consolidation versus others is needed. And in this case, just pay close attention to the daily closes, below, 86 to 80. You can just take 83.5 to 86. If it closes below 83.5, it's expansion down to the next level. Very clear. If we get above 93.5, 94,000, we're looking 96 to 98, and then 98 to 101, possibly incorporating some of the next weeklies above, even on a swing like 102.5, 103.5, fair game. And until we actually see a concerted breakout of this consolidation, it's, you're going to hear people talking about everything else and then comparing Bitcoin to it. And honestly, if you believe in Bitcoin and the crypto markets longer term, quite frankly, if you're here and you believe some of the things I do about Bitcoin, cherish the opportunities to buy lower prices while you can, right? When it comes to the rest of crypto, just look to Bitcoin. If it starts revving to the upside, I'd expect the rest of the market to follow in terms of US dollar pairs. And so even if you're not a Bitcoiner and you're into altcoins, you should be rooting for Bitcoin to go to the upside and just trying to identify opportunity when it does head to the downside. So I'll leave you with that. I hope you all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. I'm not going to actually be uploading any video on Wednesday. It will be on Friday. So just pay close attention to the end of that Wednesday session, which might be a shortened session for New Year's Day, New Year's Eve day, I should say. And then I'll follow up with you on Friday. So, yep, have a great one. Go ahead and like and share this out there, and I'll talk to you again on Friday. Oh, yeah, Landy out.